We have almost 60 people joining us today, so that's really exciting. I'm so glad that we were able to spread the word and get this information out to the local business community. I know everybody has a lot of concerns and a lot of questions. I'm Valerie Zizak Moraes. I'm the new president CEO of the American Canyon Chamber of Commerce. I've been working closely with Paul Hicks from Payroll Masters to put this whole presentation together for us. We have a couple great speakers today that are going to fill in all the holes of information that hopefully everybody's been dying to hear. So I'm going to just do a couple housekeeping notes. We're going to keep everybody's microphones muted because we want to make sure that we're getting the full sound from our presenters and we're not being interrupted with any background noise. Also, we're going to be using the chat feature. So you'll notice, depending on if you're using a device or if you're using your computer, the locations are different where all your features are. But if you're using your regular computer, you'll notice in the middle of the bottom screen, there'll be a button that says chat. If you have a question, please write it out in the chat zone, and then we'll be calling on you. I believe, Paul, do we want to call on them to answer, or do we just?
Yeah, just type the question in the chat box and we'll answer them as we go. Okay.
So we'll just type our questions in the chat box, answer as we go. Also, just keep in mind that today's presentation is going to be recorded. So there's a possibility that whatever question you submit, we probably will not be saying names of who they're from, but your questions will be read aloud, and this video will be posted on Facebook and within other marketing materials that we have to send out to our members. So just let everyone know once again that will be recorded today. So hopefully everybody's okay with that, and if not, then please remove yourself from the chat and then we can send it to you in person. Other than that, I'm just going to introduce our speakers today. So we have Paul Hicks from Payroll Masters. He's been the mastermind behind a lot of this, really got it put together. He's an awesome resource, has great energy, and we're really excited to hear what he has today. We also have brought in Stephen Schug from Bank of America. He's one of our celebrity presenters, and he's going to be answering any questions from the lending side. He is here with Bank of America, so he's a bank that everybody's really familiar with. We also have Richard Ribiki. He's from Ribiki and Associates. He's going to be giving us all of our fine detail and lawyer perspective of all of it. We also have Carlos Guiterrez from the SBA, and he's going to be bringing in all of his insight. So we hope that the presenters that we've put together today are going to answer all of your questions. And I'm really thankful that everybody's supporting the American Canyon Chamber and you're coming out for our presentation today. And I'm going to pass the floor off to Paul. And remember our little housekeeping notes, and I hope everybody learns a lot today. Thank you.
All right, good afternoon, everybody. Thank you for joining us. I am going to share my screen now. We're all here to, this is weird, I have actually no video on my screen anymore. Anyway. We are going to be talking about the financial relief packages. Actually, Valerie, are you seeing my screen? I think I am having some technical difficulty. There we go. Okay. So, we are here to talk about financial relief packages for COVID-19 situation from the federal government. And I keep hitting the wrong buttons. So we specifically are going to talk about the Family First Coronavirus Response Act of FFCRA, which includes the paid sick leave and the Emergency Family Medical Leave Act. We're going to talk about EIDL, the Emergency Economic Injury Disaster Loans available through SBA, and the Paycheck Protection Program, which is really what everybody wants to hear about. So, and once again, my name is Paul Hicks. I'm with Payroll Masters. We are a local and regional payroll service with about 1,000 clients based mostly in the Bay Area. Been around for 32 years. Our home base is in Napa. Around 20 employees depending on the season. And we do full service payroll and related services. I need to mention that I'm not a lawyer. I'm not a banker. I'm not a financial advisor. I don't have a license. So everything in here is my opinion and my impressions. So let's jump right in, and we want to talk about the FFCRA paid sick leave. Now, let's keep in mind this is for leave taken that has actually taken between April 1st and December 31st of 2020. So what is it? It is for employees who are required to stay home either because they are sick or because somebody in their household is sick. They can earn 80 hours of paid sick leave paid by the federal government through employment taxes. And I'm going to go through how that works in just a minute. So the employer would actually take, if in the scenario, an employee gets paid 80 hours of sick leave, those dollars are then offset by the employer's federal tax liability. So in our case, when we run a payroll, we actually impound the full amount of the federal and state payroll tax liability. And that the dollars for that sick leave would then be subtracted out of that tax impound and not deposited with the federal government. If you have too many people taking sick leave and not enough full tax liability, you're going to apply for a credit on this form, the 7200. And I have this cool highlighter pen that it actually goes in box number 2. And anecdotally, we just literally filled out our very first 7200 today and faxed it into the IRS for a client. So it's not a horrible process at all. It's actually very easy. And I think we've been hearing from Treasury that they're supposed to be getting checks out within around 2 or 3 weeks. So who is eligible for the paid sick leave benefits? And here we're going to ask Rick to jump in and make sure that I don't say something that's wrong. But the sick leave benefits, there are 2 tiers of sick leave. There's going to be the full employee salary up to a max of $511 a day or $5,110 in the aggregate for an employee who is under quarantine or an isolation order, who is self-quarantined ordered by a healthcare provider, or is experiencing symptoms and is trying to get diagnosed. The second type of sick leave is for an employee that has to care for another individual who is under quarantine, caring for a child who's under 18 due to public health emergency and a school closure or child care closure, or substantially similar conditions. Now, this is something that I think Rick is going to want to step in with. The rate of pay for that is up to 2/3 of the employee's rate of pay for a max of $200 a day or a $2,000 aggregate. Now, there are some minutia in there of how you figure out what the regular rate of pay is, and how you figure out what you should be paying your part-time employees. So the short answer is you average out the part-time employees' hours and use that for what their normal rate of pay would be. Sorry, I'm looking for my chat button. I thought I saw somebody throw a question at us already. Oh, yes, we did. So yes, okay, the question is, what happens if you use freelance 1099 people to support your business? They do not constitute as employees, correct? And yes, that is correct. If a person is a 1099, they're by definition not an employee. The next one has to do with PPP, which we haven't gotten to yet. We have a temp employee is covering a maternity leave. PPP forgiveness means retaining employees, but the temp is done 429 and the regular employee comes back. No, it's going to be big. The actual employee count is the number of employees on payroll. I hope that made sense. The question is the changeover a problem? Does the count as retaining an employee, or is changeover a problem? And no, it's not, because it's really just based on the number of employees you have on payroll. And there's an actual time frame that you're required to do that. So the second part of the FFCRA is the paid emergency paid family and medical leave. So under standard FMLA, if you have more than 50 employees, an employee would need to have at least 1,250 hours worth of service before they're eligible for FMLA leave, and it's unpaid. So this new emergency legislation makes it a paid benefit for very specific reasons. Here we go. Everybody is required, all of you, every employer is required to have this new poster, which you can get at this link, and these slides will be made available, right, Valerie? Yes, thank you. So you'll be able to hit the links and download this. The thing that we find most important is this number one bullet is subject to a federal, state, or local quarantine or isolation order related to COVID-19. So anybody that was shut down after April 1st would be eligible for both sick leave and the FMLA. So how does it work? The functional part of it, what we do for it, is the same as the sick leave. So we're going to reduce the amount of the federal payroll tax that we would take from our clients and that we would deposit on their behalf. So it stays in your bank account. So the federal government is paying your employees to not be at the office. So in general, it starts on day 11 of the employee's leave. However, they can use their regular sick leave, that first type of sick leave, at $511 a day max for the first 2 weeks. And then on day 11, they would go to the $200 a day max or 2/3 salary for FMLA. And it's the same, essentially the same with what full-time is and part-time, and how you figure out what the regular rate of pay is, et cetera. And part-time employees are based on the average numbers worked over a 6-month period. So who qualifies? Anybody who's a caregiver of a child under 18, someone who's unable to work because they're taking care of a child under 18 because of a closure of either school or the daycare. They have to have been employed for at least 30 days. There are no minimum hours of service required for the employee to be paid for FMLA, and the returning employees must retain their original position. So Rick, let me see if I can unmute you. There we go.
There we go. I'm unmuted.
What would you like to add?
Well, I think one thing to remember is that there was a lot of talk when the Act first came out that Congress seemed to refer just to a son or daughter of an individual. And the Department of Labor has been very clear that when you're looking at people who falls in the definition of child, that not only does it include sort of the more expansive common notion of child, like a stepchild, adopted child, etc., but also anyone who stands in loco parentis. And so this could very, very possibly apply the same way that other types of FMLA apply to someone who regularly cares for another person's child, but isn't even either isn't related to them or is more distantly related to them. So, for example, you've had an aunt or a grandmother who frequently cared for a child. The definition of son or daughter or child under FMLA would include those people too, if they are ordinarily in a place where they watch that child sometimes. The second thing that I'd say is it doesn't just apply to people who are under 18 if you have an over 18-year-old child who's disabled for purposes of federal law, meaning they get some sort of disability benefit. So you could have an employee with an adult child who they're caring for, and that would count as a child because they fall into that disability. That's the only time someone over 18 counts.
Gotcha. And in the meantime, the chat room is lighting up with questions. So I'm going to try to catch these as we go. Two in a row ask, what if an employee has applied for unemployment? I'm not an unemployment person, so I'm not an expert in this, but I can tell you that in my best experience, you cannot get paid and be receiving unemployment. Although some of that I think has changed with the work share program. I'm just not that familiar with it.
Can I jump in just for 1 second, Paul?
Yeah, sure.
So let me say this about unemployment and the receipt of these types of benefits. One of the oddest things that has happened is that the Department of Labor interpreted an isolation or a quarantine order to include shelter-at-home orders, which is very, very different. That there is a federal definition for both quarantine and for isolation, and it would never apply to a very broad order like this. So as a result, there are people who are unemployed right now because their businesses have closed. Mm-hmm. Those people should be on unemployment. They should always be on unemployment, and they are never eligible for these benefits. So if somebody is on unemployment or has claimed unemployment because the employer has told them, I don't have work for you, then they are not eligible for either the emergency paid sick leave or the emergency family leave benefits.
Right, and we have to remember that it's for leave after April 1st. So anything before that just doesn't apply.
Yeah, and anybody who doesn't. Now here's the trick. So you'd think, okay, who does it apply to? Well, it doesn't apply to anybody who's been laid off, furloughed, whatever term you want to use. So they don't get it. And that's been a real problem for employers, because employers are calling and saying, I've been out for 3 weeks, I'm applying for unemployment, but I understand I get these 10 paid days from the federal government. The simple answer to them is, no, you apply for unemployment, you're going to get the unemployment benefit, and you're also going to get the federal stipend that came in the second law under the CARES Act. All right. Secondly, here's the problem with covering shelter in place. If you have an employee, so let me just say again, you can only ever get these benefits if there's work for you to miss. So you have to be scheduled to work. Well, here's the problem. If someone calls up and says, my business is operating and I can't come in because because I've got this shelter in place order or shelter at home order, unless they've got one of the other conditions, like they actually have been told that they have to quarantine because they've been exposed, or they're showing symptoms, or they are caring for somebody. If it's just that they're subject to the shelter in place order, if their business is operating, it must either be an essential business, or it must be operating under minimum basic operations, which are allowed under the shelter at home ordinances. In that case, there's work available for the people. And unless they've got some other reason, like they're caring for a child, they can't just say, I'm going to stay home because of the shelter at home order.
Right.
So there's some logical problem, because we've had people calling up and saying, well, I'm just going to take my 10 days. I'm not going to come in. And the employer's response ought to be, no, we're a mask maker, or a healthcare provider, or some entity that's actually allowed to operate, which is a lot of entities these days. And in that case, you tell the individual, you're not eligible to take the leave because we have work for you and you're able to travel under the ordinance. You're not prohibited from traveling to come to your job. So I'd explain that in more detail, but it's really a problem for employers who want to provide 10 days if people are subject to the order, and they know they're going to get paid back by the federal government for giving those days. But when they're audited after giving those 10 days to all their employees, excuse me,
right, there might be a problem.
The IRS is likely to say, what do you mean? You were operating, you had work for these people, it was legal for them to come to work. You shouldn't have paid them the money, we're not going to reimburse you. So it's a real problem.
Okay, we got to get moving. So we have
sorry.
Yeah, it's not. No, I appreciate it. Thanks, Rick. Okay, more questions. Both emergency sick leave and emergency FMLA both seem to cover child care, inability to work. What are the most striking differences between the two? The sick leave is maxed at 2 weeks. So that's, the first part of it was intended to, for people who are actually sick, or somebody who's caring for somebody else who is actually sick. And the second half was a nod to the fact that they knew that schools were being closed, or were going to be closed, and that there would be no childcare available. So that's really the biggest differences between the two. FMLA is a full 12 weeks when you add in, well, it's 10 weeks plus the 2 weeks of sick leave. So next one is a long question about specific circumstances with trying to submit a loan app for PPP, which we haven't gotten to yet, but I would, and the question is, should I find another bank willing to work or just hang tight? And the guidance that I've been hearing from SBA and others is that you can only get one PPP loan. So if you put multiple applications in, you may confuse the process, and it may make it much more difficult for you in the long run. So the guidance that I've been hearing is that you really want to, once you've submitted your application, you want to stick with that. Next question: what about businesses? Businesses like estheticians? I can never say that word. And salon professionals. They're sole proprietors. How do they get covered? We have been told not to work, and so there is no income, but we are not on payroll. Okay, so as of Friday, the 10th, sole props and 1099s are eligible to participate in the PPP, which again we're going to get to. The same as everybody else. So you can apply for a PPP and an EIDL loan, I believe. I'm gonna have to clarify that with Carlos in just a second. So can we apply for unemployment as S Corp owners and still qualify for a PPP loan? I don't think there's anything in the PPP loan process that asks anything at all about unemployment. So same question about estheticians. And last question, well, it's another question for Rick. Confused if our preschool is closed, can the employee applies for unemployment, can they still get these 10 days? So in general, you cannot be receiving pay from your employer and receive unemployment at the same time. I guess that's the easiest way for me to answer that question.
Well, no, but and not only that, Paul, but if you are for the law's purposes, if you're not working, if your employer has put you off of work, you can't collect the benefits. So you wouldn't be able to get unemployment unless you've lost work. So you wouldn't be able to get benefits if you haven't. Yeah.
There you go. And once again, you know, we handle the FMLA the same as we do the sick leave, and on this one, you would actually just put the credit on line number 3 instead of line number 2. Okay, idle grants. Hold on a second, I have to minimize some stuff. Chat room was taking up half my screen. The SBA is providing idle assistance, which is economic injury disaster loans, and providing it up to a $10,000 advance on those loans, which is considered a grant. So Carlos, we need to, I might need to unmute Carlos's phone. Bear with me for just a second. Oh, there you are. Yes. All right, Carlos. So what's going on at the SBA?
Okay. Well, let me pull this up here. Give me a second. I'm going to go over both of these programs. There have been a couple of updates recently, so bear with me here. As I mentioned last time, a lot of this information is updated weekly, daily, and hourly, actually. So, you know, something I'm saying right now, you know, we'll get an update later on today or tomorrow. The economic injury disaster loan has actually been around a little bit longer than the PPP. So a lot of the information about that is already developed. But just as a caveat, the PPP, some of the answers about, you know, specifics and granularity about SOPs and things like that, we don't have that information. But I'm more than willing to answer any questions that folks have at the end here. And if I do know the answer, then I'll surely provide it. So first, before we get into those, I wanted to mention the debt deferment and relief, and that's for existing disaster loans. So if you had a disaster loan related to the wildfires or something like that, or any other type of disaster loan, those are automatically deferred through 12/31/20. Also, existing 7A 504 micro loans can be deferred, but that in order to start that process, you need to have a conversation with the lender on those loans. That's not automatic with the other ones. The disaster ones are. And the reason for that is that those are managed internally through SBA, and 7As and 504s and microloans are managed out of independent lenders, obviously. There's also SBA debt relief program where the SBA will pay principal and interest on any new 7A loans issued prior to September 27th, 2020. So any SBA loans that you're getting in March and right now all the way through September 27th. And the SBA will pay the principal and interest of current 7A loans for a period of up to 6 months. There's also a 7A Express Bridge loan. That loan's been around for a while. It's up to $25,000. The paperwork and documentation is limited because it's a small amount. So that may be a good option for folks. The PPP was made available on April 3rd, and I'll come back to that. I just wanted to mention that briefly. That's when that one started. There's also 2 elements of this economic injury disaster loan. There's one part that's known as by the way, the acronym for that everybody's using is EIDLE for the economic injury disaster loan. And the paycheck protection loan is known as PPP or triple P also, so if you hear that in conversations. The advance, the EIDLE advance is up to $10,000, and that's based on a head count of 1,000 per employee. Independent contractors, 1099s, do not count as employees for this purpose and should not be included in the head count when when looking at applying for the advance. The other part of the economic injury disaster loan is the one that's been around for a while, the one that was used for forest fires and other kinds of economic disasters. That one can be up to $2 million. There was conversations last week thrown around that one was actually reduced to $15,000. It was in the news. That's not accurate. Not accurate currently. I believe they were lowered it for a period of a couple of days, and they removed that restriction. So now it's still up to the $2 million, but obviously on a case-by-case basis. It's also handled a little bit differently than most conventional loans in that when contacted after submitting the application, you're going to work with an underwriter in the processing center to determine financial need. Vis-a-vis, you might say, well, I've determined I need $450,000. After working with them, they might say, well, you need, we'll approve you for 200, or no, it's actually 800,000. So those are just numbers that I'm throwing out there, but just to keep in mind that it may not be the actual number that is requested. Also, if for folks that have already applied, in some cases, the advance, when you put in the application, it asks for your bank routing information, things like that, in addition to conventional information about your business. We've been hearing from clients, small businesses, that sometimes the money just shows up in their account. They didn't really get an email or anything. So I know it may seem strange to say, but if you've applied for it, check that account that you put in there, and the money might just end up in there with no correspondence email. You will receive correspondence when getting into the processing side of the regular EIDL loan, because there needs to be closing documentation that you work with underwriters in the processing center to get turned in. Now moving on to the payment protection program. Those are loans provided by participating lenders for up to 8 weeks of payroll costs, including benefits, and funds may pay interest on mortgage, rent, and utilities. There is a requirement, eligibility requirement, that if there's a portion of that loan that is eligible for forgiveness, but it must meet the qualifying criteria that 75% of it is used for actual payroll costs and employee benefits, and health benefits and other benefits fall into that category of payroll and employee benefits. The rest, the other 25%, can be used for mortgage, rent, utilities, things like that. Other things that are included in payroll costs are state and local taxes and cess, vacation, sick leave, insurance premiums, and the like. The loans will be forgiven if used for payroll expense. I already went over that, excuse me. It's also retroactive to February 15th, 2020. So employees can rehire their recently laid off employees through June 30th of this year. Eligible businesses include all small businesses, including nonprofits, veterans organizations, tribal concerns, sole proprietorships, self-employed individuals, and independent contractors. The maximum loan amount is $10 million. The term is 2 years. Let me go back to the EIDL real quick. The term for the EIDL is 30 years. That's an important distinction, because this one offers a larger amount but a lower term. The EIDL offers a limit of $2 million, but it's up to 10 years. So back to the PPP. Payment is deferred for 6 months. It's 100% guaranteed by SBA. There's no collateral or no personal guarantee. No borrower or lender fees payable to SBA. There's also a link that you can go to find one. There's a couple of resources. A lot of the lenders are starting with current business customers and then going to current banking customers. So if it's more of a challenge, and I wanted to mention this because we're aware of what's going on right now in the field. It's more of a challenge to find lenders for non-current customers, but they are out there. I've spoke with 1 or 2 recently, so it's more of a challenge, and the funds are going out The most current numbers we have are about 248 billion already approved. That hasn't been all released or anything yet, but that's just approved as the program just started. I know I'm jumping around here a little bit, but I wanted to go back to the economic injury real quick. So there's a portion of both loans that can be forgiven. With the EIDL up to 10,000 and the PPP, it's on a case-by-case basis. You can apply for both, and if you get the full 10 or if you get 5, whatever amount that is, that's taken off of the forgivable portion of the triple P if you do indeed receive both. There are credit history requirements for both. The biggest factor is repayment ability. There's no collateral for loans under 25,000. Loans over 25, SBA is asking to pledge available collateral, but will not decline a loan for lack of collateral.
And you're talking about
The interest rate. That's correct. The interest rates are for small businesses are 3.75% and 2.75% for nonprofits. The PPP, the interest rate is 1%, just as a distinction. And the loan term for the EIDL is max of 30 years. You have to meet SBA size standards. Small agriculture cooperatives and aquaculture businesses qualify. Private nonprofits. And there's this list of ineligible businesses. So I'm just, as a matter of course, I'm going to go over these. Gambling concerns, illegal activities, owners delinquent on child support. This one was recently added. Prior, the farms and religious organizations were not eligible. They are eligible now. And just as a matter of course, religious organizations can use it to pay for the costs of salaries for clergy as well. So those were taken off of the ineligible list. Continuing with the ineligible is state and local governments, lobbying concerns, and concerns in sale or production of prurient sexual nature. That's pretty much all I have. I know there's probably a lot of questions about specifics, so I'm more than happy to take those.
All right, thanks, Carlos. So while you were speaking, we got another flurry of questions. So we should probably tear through some of these. First is, we've been around since 2014. We have our first order in 2020. We plan to pay our first payrolls in February. The order is now on hold because of COVID-19. We don't have any historic revenue, only cost. Are we eligible for the Paycheck Protection Program? Well, it's based on, let's get back to this. The PPP loan is based on payroll. So if you had no payroll, then there's nothing for them to base the loan amount on. I don't think that would qualify as an eligible application. Apply for PPP, which requires to maintain full payroll on employees working except for one who is staying home to take care of small children. Does PPP cover this? Yes, it does. And would we pay her payroll or manage through the FFCRA? She's currently getting unemployment. So if you do, well, there's a couple of ways to answer the question. If you do use FFCRA, then that amount would be subtracted from the forgivable amount of your PPP loan. So in other words, you cannot double dip in these two programs. Regarding your head count, the specifics about that, I have to turn the other direction so I can read this. Head count may not just decrease. If your head count does decrease, it will proportionately reduce the amount of the loan that's forgiven. And you have to remember that at least 75% of the loan money that you receive is used for payroll for it to be forgiven. 25% of it can be used for things like rent, utilities, employee benefits such as health insurance, and or contributions to a 401k plan. So the way that you figure out what your headcount is going to be, you're going to use one of two different metrics. You're either going to use the period between February 15th, 2019 and June 30th, 2019, or you use January 1st through February 29th, 2020 to determine what your head count is going to be and what you need to keep your head count at by June 30th of 2020. So as long as you get all your employees back, you have all your employees back on payroll by June 30th, then you're going to be fine. Your loan amount should not be reduced. Let's see. This chat window kind of jumps around a little bit on me if I'm not careful. So I kind of lost my place for a second. Here we go. Originally, the cash advance grant was communicated at $10,000. Recently, it changed to $1,000 per employee and a max of $10,000. What happened? So the language was always a max of $10,000 for idle disaster loan grants. Right, Carlos?
The initial guidance was that has always been that it would be up to 10,000 on the advanced portion of the idle loan. The change was just that number is figured on a headcount basis of 1,000 per employee. That was guidance that we got as they were developing the loan program.
Gotcha. Thank you. And someone was asking if you would give us a list of all the other loans that you mentioned. You went kind of quick. So if you would you be able to forward that on to Valerie?
You can follow up with me on that. That's one of the things that we're trying to ascertain right now in terms of sharing the list of lenders that are currently participating. Up till now, I will say our guidance is that we, because of clearances that are required, we've been told we can't share that list. But there's conversations about, excuse me one second, let me turn that off. Up to now, we have not got those clearances. We're hoping we get them within the next maybe couple of days or a week or two. So definitely follow up with me, and as soon as we can, I'd be more than happy to share it with you.
Okay, very good. Oh, I applied for an idle loan on 3/30 and haven't heard anything back. Should I apply again? I don't think so, but I had been hearing anecdotally, just kind of off on the side.
Can I jump in there?
Yeah, go ahead.
Okay, so the advice, the guidance we've been given is there was an early tranche where the portal was requesting folks to put in like a full loan application, and if the number of the application starts with a 2, they may want to go ahead and put in another one, and then this time they'll get an application number that starts with 3. I think it's like a 9-digit application number. The reason for that is if the iteration that it's on right now, you would be applying it with the application number that starts with 3. You're applying for both the advance and the regular idle loan. Initially, there was only, and this is a clarification that some folks didn't know. Initially, there was just funding for the idle, the economic injury disaster loan, which is a current and has been a current SBA loan program for years. So that's the reason it was asking for, per se, like a full application to be submitted. So if small businesses applied for that one, they were not necessarily applying for the advance because the advance didn't exist. I can't remember the exact day until it was authorized. So if there's a concern of, well, have I applied for both? They can go ahead and apply again, and then they'll be applying for both of them, the advance and the actual full loan.
Okay, great, thank you. Okay, so next question. So a self-employed individual such as a personal trainer can apply for PPP to replace his own net income. Yes, you can using a K-1. And you're going to use the super simple application form, which is all of 2 pages. It really is super easy. It only took me, I think it took us maybe 10 minutes to go through the entire application process, which actually brings me to some of the slides that we've not talked about yet, what we're doing for our clients. So depending on the bank, in general, most banks are asking for payroll reports from January 1st, 2019 to December 31st, 2019. We've been providing copies of all four quarters of the 941s We have been, for those who ask, there are some banks that ask for W-3s and 940s. And there are some other additional reporting that we can provide that will help the client out. The banks may also ask for information such as they might want a utility bill, a rent bill, or a canceled check, health insurance payments that the employer makes on behalf of the employees, and contributions to their 401k or other type of retirement plan. As we said, the loan term is for 2 years at 1% with a 6-month deferment. So the idea is when you're requesting your PPP loan, it's not to shoot super high, because remember that you have to spend at least 75% of the loan on payroll for it to be forgiven. So anything that it does not get forgiven gets written into this 2-year note, which you don't pay anything for the first 6 months, and you have to remember what your cash situation is, because now you're on the hook for whatever amount that loan is. You have to pay that off in a year and a half. And at that point, I think we want to bring in Stephen too, for a few of his thoughts about where we are. Stephen with B of A.
Hi guys, can you hear me?
Did we lose you?
You hear me?
Yes.
Excellent. I don't know why there's a ringing going on. Is that just me?
I think it's just you.
Okay, well, I'll go ahead and push through that. Good afternoon, everyone. My name is Stephen Schug. I am a financial advisor with Merrill Lynch Wealth Management. We are a part of the Bank of America family, and I was invited here because I thought that would be beneficial to share some of the resources that Bank of America is providing some of our customers and clients. The ringing has gone away. Paul, can you please repeat your question?
Oh, I was just asking for your insights about what B of A is doing.
Yeah, absolutely. Thank you for the clarification. Again, I'm a financial advisor, not an approved spokesperson, so I'll be giving a high-level overview briefly. Basically, we have a 2-part approach in solving solutions for our clients and customers. On the one hand, we're having various fee refunds. So, for example, refunds on overdraft fees, non-sufficient funds fees, deferments on payments for credit cards, your business loans, auto loan deferments, as well as mortgage and home equity payment deferments. There are general bank deferments and refunds that we are giving our clients and customers to help them through this tough time. And we are also participating in the PPP application program that can be found. Let me find the link here. I believe it's bankofamerica.com/SBR resources. The way that our program works, in order to make it as efficient as possible, the program is entirely online. It's entirely through the website portal. And unfortunately, I'm not able to specifically talk about any one business's or individual's situation. I'm not allowed to have any speculation. But basically, the portal is going to be self-directed. The individual is going to log on through the portal if they have a business and credit or lending relationship with us, or if they have a business relationship with us, a banking relationship with us, and not any credit or lending relationship with any other institution. Businesses need to provide their application through the institution that they have a credit or lending relationship with earlier, because as you covered earlier, you can't double dip your application, and the most secure way to get this done is through your credit or lender. But basically the way that the portal works is you're going to log on to the portal. If I scroll down just a little bit, apologize, 1 second. Here we go. You're going to log on to the portal. You're going to enter details about the eligible loan. You're going to have a field for your average monthly payroll. You're going to have a job field for the number of jobs supported by the company. You're basically going to fill out the application. You're going to send that up through the system. It's going to be entirely automated. If your application is approved, then you will get a request back for documents. I'm not able to speculate on what documents that the customers are going to need to provide because each individual situation is going to be completely different. But basically, you're going to produce your documents and then send them. That link at the bottom there, treasury.gov, the Treasury is going to have information on what specific documents that you need. The other thing that we're doing in addition to our Paycheck Protection Program, as well as the measures that the bank is taking to support its customers, is I stand by ready to answer any questions about individuals' personal situations, to take a look at their financial picture as needed, because I believe that a combination of business loans as well as the PPP program, as well as looking at their financial picture may be a solution, but that's going to be on an individual basis. And I can't really comment more than that, other than just to say that I stand ready to assist anyone that needs it. So that's basically what I have. We're doing everything in our power to support our customers and our clients. So that's what we're doing basically.
All right, thanks, Stephen. So, and once again, we got a whole flurry of questions, but Valerie suggested we go through the rest of these slides before, and we can start answering questions at the end. So, which I think is a pretty good idea. So again, here's the application that the bank is going to be looking for you to fill out. I already mentioned what we're doing for our clients. We know the term is for 2 years at 1% with a 6-month deferral. You can use the money from the loan for a number of different things, but remember that 75% of the money needs to be used for paying your employees. However, you can use the loan to pay your rent, pay your utilities, pay interest on any other debt obligations that were incurred before February 15th, and you can refinance existing SBA loans into this PPP loan. Lost my little controller. So payroll costs are everything that you would consider in general, which you would normally consider part of your payroll costs, including payment of state and local taxes, employee benefits such as group health coverage, insurance premiums, retirement, etc. Which is important because when you're calculating your 75% of payroll, we want to remember that all of these things are included for your payroll costs. And your lender should help walk you through that. So when these PPP loans are made, you're actually taking a loan from the bank that's guaranteed by the federal government to be repaid by SBA to the bank. So the bank is the one that's doing the underwriting and there's a bunch of requirements that they have, like know your customer, et cetera. So they have to go through some hoops to make sure that they're getting this set up correctly. And the bank is the one that's going to decide what amount should be passed along to SBA for forgiveness. So, and there's one last provision of the CARES Act that I should talk about. This is the employee retention credit is actually the least beneficial, in my opinion, part of the CARES Act for employers. What it allows you to do is to defer, not eliminate, to defer the amount of the employer paid FICA for the first 50% of the first $10,000 in wages. So essentially $5,000 worth of wages. It allows you to defer those FICA tax payments for essentially a year and a half to December 31st, 2021. You have to pay the first half, and you have to pay the other second half by December 31st, 2022. And the reason that I really don't like this very much is because, one, we, for example, as a payroll company, have no method of tracking that. There's just no way mechanically for, everything we do is based on an actual calendar year, and everything resets in January. So it'd be impossible for us to do, which means that you're going to be requesting these credits on line 1 here of the 7,200 again. And you're going to have to track when that liability, what liability and when that liability is due. And that's just going to be, a challenge. Secondly, it's going to create a future cash flow event. You're going to have that money. You're going to have that money available on December 31st, 2021 and December 31st, 2022. And you don't know what your cash situation is going to look like, that far out. So I think this is really the least effective method. It's also only available if you do not receive a PPP. If you get a PPP, this isn't even an option. So let me start going through some of these questions again. So the headcount for PPP would include the person that we're paying sick leave to for that period. Yes, if you're paying sick leave, they're on your payroll. So, in my opinion, I think that that's going to qualify. Next, we furloughed some employees but reduced headcount. It's based on headcount or payroll costing 85%. So it's not 85%, it's 75%. And you have to, for the loan to be forgiven, you have to spend at least 75% of the loan amount on your payroll. There is also the headcount requirement. It's both. So you have to have the same number of employees that you had on payroll when it was that I said it was February 15th, I think, through June. My computer just went to sleep. And you have to base it on 75% of the payroll at the same time. So yes, February 15th through June 30th, 2019, or January 1st through February 29th, 2020. Can the advance from idle be used for paying off purchases made by the business from February 15th, 2020 until shelter-in-place order? This is a question for Carlos, but I seem to remember that yes, it's retroactive to February 15th. Carlos, is that correct?
Could you repeat the question?
Can the advance from idle be used for paying off purchases made by businesses from February 15th, 2020 until shelter-in-place order?
Yes.
Great, thank you. I saw a question that I can't find now. Is there any preliminary forms that I've seen that the lenders are going to be using to forgive the loans? I have seen one, and I just received it maybe 2 hours ago that somebody else in our industry got from one of their participating banks. It was basically a spreadsheet. Keep in mind that you can only use funds, you can only ask for and use funds for the first $100,000 in wages. So what that means is you have to take $100,000, divide it by 52, multiply it by 8, and it equals, in an 8-week period, $15,384.61. Anything else above that would not be forgiven and would have to be rolled into the loan. So, Sean, the best I've seen is a spreadsheet. If you want to drop me an email, I'd be able to. I'm happy to pass that along to you. It looked like a pretty solid worksheet. Essentially, what you're going to be doing is providing payroll reports, and then other ways of substantiating your other costs. Okay, does anybody know how long it takes from doing an app to the receipt of money through a large bank like Chase where you're a current business customer? No, I don't think anybody knows. The short answer is, if you have an existing relationship with the entity, it's going to be faster. No matter, the application process will be faster because they've already done the underwriting on you as an entity. As of now, what I'm hearing from my bank friends is that SBA has not yet provided the full loan docs for the banks to be able to write. So there's some of the banks have been basically dragging their feet, waiting to get more guidance from SBA. Yes, the slides will be available later if you'd like. Okay, actually, I think I got through all the questions unless anybody else has anything else. And look at that, we got wrapped up with a minute left to go. Oh, we have one more. Oh, actually, Valerie asked me to announce to everybody, if you put your email in here, Oh, thank you. Put your email in here. We will, if you're not a member of American Canyon Chamber, and they will send over everything, including the presentation, when it's over. So please put your email addresses in here, and Valerie will get you all the information. Okay, so if nobody has anything else for us, I think we will wrap this up and say thank you to the Chamber for hosting us. I'd like to say thanks to Stephen Schug, Carlos Guiterrez, and Rick Ribiki and Associates, our favorite labor law attorney, for helping us out with this presentation. All right, thanks again, everybody.